Trading Nut, episode 152.
I would try to use some exit which is diametrically opposite of the entry. So if I have entered a trade because of a specific reason, so if there has been a specific trigger that produced the trade, I would exit it when something opposite or something close to opposite is happening.
The market's going to do something. Your job is not to fight it.
The market never, ever runs away. It's always there.
That personal diary of trading will make you a much better trader than...
I could be right about the direction, but wrong about the trade.
Don't focus on the monetary side.
Trying to make too much money on a trade is what I have seen killed every trader.
Your losses offer you some of the greatest insight you can find into your mistakes.
Relax, learn the process.
Candlestick pattern trading is a freaking trap.
Don't be in a rush to become a millionaire.
Let the market tell you what the market wants to tell you.
This podcast is not financial, trading, or investing advice of any kind. What's up, traders? Welcome to another installment of the Trading Nut podcast. I'm your host, Cam Hawkins, and today we've got Cristian Franchi here on the show. Now, if that name sounds familiar, even if it doesn't, he is currently second in the Global World Cup Trading Championship, and he's running fifth on the Forex. Now, I think when we recorded the interview, he might have been doing a little bit higher on the Forex, but I think he was still holding strong at second place, maybe even first on the Global World Cup Trading Championship. Now, we've got a treat for you guys. So this guy has been doing that for the last year in one instance and 6 months in another. He's getting over 100% returns, and he's got some amazing stuff to share with us today. He's an algo trader, but guys, if you're not algo traders, don't get scared off. This interview is going to be handy from a number of points of view. There's also a sort of secret, I suppose, that he drops here. He hasn't shared it with anyone. This is what he's done to get himself to the top of these tables in this World Cup Championship. So that's coming up in a second. So the other thing, talking about, I suppose, algos, talking about robots, I've actually just released a video in my on my YouTube channel. It's about Heikin-Ashi candles. I've built a trading algo that's based on that, a pattern that I've noticed in the Heikin-Ashi candles. So if you want to go and find out how that pattern plays out, have a look at the back tests, learn the strategy, have a look at how you can work with the robot, and even if you want to get your hands on the robot, then it's part of my robot lab, which you will get this month of December 2021 only if you join my Robot Builders Club. So if you're looking to automate some or all of your trading, that's a great place to go to learn how to do it without using a coder, without doing any code. In fact, I teach you all the skills I've learned over 7+ years of doing this to help you build trading robots as quickly as you can possibly do it, and also with complete and utter flexibility. So guys, that's coming up as well, and hopefully I can get this out before Christmas. The Genius Trader is coming as well, so I'm not going to spoil what that is for you. Stay tuned. And this week I'm dropping another video with the first guy I had on the show, who was 15 years old, and his video's gone crazy. Like, he's got over almost 1.8 or almost 1.9 million views on that video. I've got him back on to do an update now that he's turned 16. It's Philip Bloom, and I recorded it in the weekend. I've got to say, this is fantastic stuff. Such a simple approach. He's really trimmed down what he's done. You're going to see that. You're going to see him break down, I think, maybe 4 or 5 trades. The video is for about 20 minutes. It's like a mini trading course, guys. It's absolutely fantastic. You've got to check that out on the YouTube video. I'll put links below this as well so you can get access to it. Now, if you're wondering, hey, Cam looks a bit different. Yes, the tooth is back in. The tooth is back in. So I've now got a full mouth full of teeth, which is great. So if you're watching the video, you can see that. Obviously, if you're listening to the podcast, you'll have to jump over there to YouTube and get a look at that new tooth that I've got in there. All right, guys, enough from me. Let's get on with the show. Hey folks, my sponsors, City Traders Imperium, have just launched some amazing changes to their funded trader program you got to check out. You can now skip the whole evaluation, trade gold as well as Forex, plus they've increased the drawdown you're allowed in both the evaluation and when funded. With CTI, it's even faster and easier to reach up to $4 million in funding with a 50 to 70% profit share. Click the link in the description to find out what else has changed. All right, folks, here we are on Trading Out. We've got Cristian Franchi here on the show, all the way from Italy. Whereabouts in Italy are you based at the moment? Rome, is it?
Rome.
That's right.
Rome.
Yeah, awesome. Now, guys, if this guy looks familiar, or even if he doesn't, he is leading the Global Cup of Trading over there on the World Cup Championship of Trading site. It's almost 6 months into the competition, and you're currently leading everyone, which I couldn't believe. So it's fantastic to have you on the show.
Well, thank you. First of all, thank you for having me, and nice chatting with you, and thanks for your followers to follow me to watch the webinar. I am currently top ranked in the Global Cup World Trading Championship, which is the most prestigious trading championship in the world, and which used to be won in the past by such champions like Larry Williams and some other few hedge fund managers and important people who made who were key players in the history of trading. This competition has always been won by futures traders. So should I win it myself, fingers crossed, that would be the first time it happens in history. So I would be very happy if that became true.
Well, look, I mean, so just to put it into context here, guys, and this is the current rankings are at the 19th of November. It's currently the 24th of November, 2021, and Cristian is coming second in the Forex trading World Cup. He's coming first in the Global Cup of Trading Championships, which we just talked about, which is both futures and Forex. The returns on the Global Cup's 146%, and the Forex Cup is 235%. So the difference between those is that the Global Cup started on the 1st of June, the middle of the year, and the World Cup of Forex started on the 1st of January. So that's why he's got more percentage gain in that period of time. Now, so tell me, to start off with, so everyone, Cristian is a algorithmic trader, and that's giving him these huge, more higher returns than what you'd possibly get if you were manually trading. Now we're going to start by sort of jumping back into your journey in a second, but before I do, I just want to talk about the fact that we had Larry Williams here on the show, who we just mentioned before, and he was obviously one of the guys who got a ridiculous return in this competition with, I think it was like over 1,000%, or was it? Can you remember what it was? It was like very high.
Oh yeah, actually 10,000%.
That's right.
It's the highest return ever achieved in any competition.
10,000%. Yeah. So what really annoyed me was I had him on the show years ago. He gave me an interview and I completely screwed the whole thing up. I didn't ask him anything about the World Cup, didn't ask him anything about the fact his daughter's like an Oscar award-winning actress who also won the World Cup. It just completely irks me. Now, let's dive back into your journey here and find out how you got started. Was it 5 or 7 years ago?
Well, seriously, I would say 5-7 years ago. But it all came back to, my father used to be a general in the Italian Air Force, which allowed me to live and get educated abroad for many years. In particular, while he was working at the United Nations in New York, I had the pleasure and honor to pursue and complete my studies with a bachelor and master's in engineering from the same university whose math department used to be headed by Jim Simmons. Now, who is Jim Simmons? He's the founder of the most successful hedge fund in the financial industry. Since those times, I got hooked. I have always been intrigued by advanced statistical concepts and tools, and by the idea of utilizing them for detecting and exploiting several hidden edges and inefficiencies in trading markets.
Hey folks, just jumping in here now. This show is sponsored by Mudrix. Mudrix offers you 3 smart ways to make money from crypto. The first is coin sets, baskets of coins you can invest in based around themes and picked by experts. The second is algos. Choose from hundreds of robots that can trade crypto for you on autopilot. And the third is to create your own algos and tap into over 50,000 Mudrix investors. Click my special referral link in the description below or the card above and get $25 credit when you join Mudrix today. Cool. And so, I mean, can you give us some insight into what these advanced statistical things are?
Yeah, it sounds like something like very dark, and I that's what everybody is. It's like my own world. Well, I have spent the past 14 years actually developing hundreds of trading algos based on robust and advanced statistical concepts and tools. As a result, I was able to develop a portfolio which is made up of dozens of the best performing and the highest. What is important for me is diversification. So Forex is, it seems diversified. It seems in reality, there is so much correlation over there, and it's very hard to find real differentiation and diversification. So what I do is on each of my trading accounts, including the World Championship one, most of the times I have many small positions opened simultaneously, each one of them being based on a particular algo, with the highest attention being paid to reducing correlation and to maximizing differentiation. So, getting it more specific, as an overview of my trading approach, I would qualify it as multi-market, trade Forex, silver, gold, multi-time frame, daily, weekly, and some intraday, but with a prevalence of daily time frame. With regards to entry setups and approaches, they range from mean reverting to trend following, from cyclical to seasonals behavior, as well as intermarket techniques. All of them in one single master portfolio containing trading systems which have stood up and performed the best since they were first conceived.
And so how do you, it all sounds great at the moment where you've finished, you got to not the end of your journey, but you've got to a point in your journey where you're obviously ranking high in these challenges. Over the course of that period of time, how did you go from at the start? What did things look like for you? Were you just completely confused, or did everything make sense? How did you make sense of this world?
Well, I even think now not all makes sense. So at the beginning, it was just a hobby for me. I was just studying the markets, trying to find edges and inefficiencies, trying to see something which could have some predictive value in the future. At the beginning, the first 5 years, I would say since 2007 to 2011, I have not even traded. It was just developing. It was just not something. It was just demos. Just research, and it was not successful. So when I used to back test my oldest trading algos, the result was quite disappointing. For sure. So it took a lot of time. It's a lot of time, and people who want to usually make it quick and go for shortcuts. I would advise them to be very patient. Very patient. It took me more than 5 years to start developing well-crafted and balanced algos that could stand a chance to be profitable on the market.
And so when you're talking about your back testing, what platform were you back testing on? back then?
Well, right now I'm using 3 platforms. MetaTrader 4, which everybody's familiar with. CTrader, which is more recent and not everybody's familiar with. It's also used in conjunction with CFDs. But my first one is called MetaStock. I'm not sure if you have never heard of it. It's mainly used for stocks, but that's the one it was owned by Reuters, and the main feature of it is the data, the quality of the data you get from using it.
Yeah, okay. So where do you know where they source their data from?
Data is Reuters data. Now it's called Refinity. So Reuters direct Reuters data, and it's quite the historical time frame is quite is huge. So I can get data from the 70s, 90s, depending on the market. I'm quite happy about their data. The Reuters data is the best, I think.
And so how far back will you be back testing?
Oh yeah, that's a very good question. I would say that depends on the market. If the market is currently behaving so differently from what it used to behave in the past, then I would not look so far behind in time, since it would be pointless. It would be like trading, considering 2 different markets, since the behavior has changed so much. I would say for Forex, at least 10 years, since my algos are on a daily time frame, most of them, at least 10 years, 15 or even 20 years sometimes.
And so in a 10-year daily backtest, I mean, how many trades would that take in a year on one particular strategy?
Well, usually a few, not many. I'm looking for edges which are quite rare and not very popular. Edges which not many people have found so far. So most of them, they produce a trade very rarely. So I must have a lot of them in order for me to have enough trades going on at the same time and be diversified. So I would say on the average, maybe a couple of trades a month on the average. Could be more or less. The weekly strategies have less. The daily ones, a couple of trades a month. The intraday ones, they have more than a couple of days of trades a month, maybe even a dozen.
Okay, and so the idea is, like, thinking about a daily kind of strategy, is that it would work on one pair, get 1 or 2 trades a month, sometimes none, and then you add that across 28 markets or whatever, and then you run that, or do you set it on a bunch of markets and go, well, it's only going to work on these markets? How do you work that out?
Okay. Yeah, well, that's the core, very important question. I mean, no, actually, my approach is quite unusual in that way too, from that point of view, since I do not use the same algo for a lot of markets. I try to study the market, specific market, and I would use an algo on 3 to 4 markets on the average, not more than 6 or 7, since a lot of markets have different behavior. So if, for example, I'm looking for a reversal, so I'm looking to buy on dips when we have a reversal, to look for a reversal. If I'm doing that, for example, on British pound, Japanese yen, which is a very trend-following breakout like type of market, I would get poor results. So I'm trying to use the same algo on markets which behave similarly. I would not try to over-optimize it and make it work even when it's not, even where it is not supposed to be working. So on markets, on forex pairs, which usually behave well with a reversal trades, I would use reversal algos. The ones that are more breakout, that tend to behave better when you buy them when they are strong, and when you sell them when they are weak. Well, then I would not use reversal. I would use breakout or trend following kind of algos.
Okay, cool. And so it's interesting that like I've had the guy, I don't know, I'll have to have a look where he came, but it was Scott Welsh. He's been on the show a couple of times, and
I know him. Yeah, he's a friend of mine.
He's a friend of yours. Okay, cool. Well, Scott. So
Yeah.
so he came second last year at the Forex World Cup Cup Championship, which is fantastic. So he was on the show here talking about how, in fact, he came on the show a couple of times because he did a trading challenge as well, and he came on and showed us a little video of how one of the ideas behind his strategies, which he just sort of reminded me of, was that he would he was looking for all the markets that had a trend, that trended, like highly trending markets, and then he built something around that. Now, it sounds like you're sort of
he goes for trend following. He's specialized in trend following. Yeah, he would rather trade British pound, Japanese yen the whole time. He loves that. He's very smart, and he has a lot of algos, especially in that on that kind of market, breakout kind of markets.
And I remember his video that he showed, that demonstrated on the channel, was that he was like, well, the start of a trend is when you get overbought on an indicator, and I think it was RSI he used. So he goes, so I just buy when we get into overbought, and then when we get out of overbought, if it stays there for long enough, then I get out. So that will give him like these, I expect, massive reward trades. But what about you from a risk to reward point of view? I mean, how do you manage that?
Yeah, well, it really depends on the type of algo I'm using. I'm considering if I'm developing a mean reverting kind of algo, I would look for a high win rate, very high win rate, and I would be happy with a lower average profit versus average loss. Because that's the nature of those kind of markets, of those kind of of pairs. If I'm looking for breakout, I do not want to win so often. As long as the profit factor is good enough, I want to catch as much of the move as possible. So I would rather lose a lot of times, but when I win, but when I get it right, I would have to, climb and follow the trend, and so they would, those few winners would make up for the many losers.
And so when you're getting in these trades that you're trying to make the most of, how do you get out of them? Are you trailing your stops, or what are the approaches?
Yeah. Well, actually, I have different approaches. I would not use a target, a take profit so often. I would try to avoid that. Back testing for many years has shown me that that's not that tends to over-optimize, that tends to produce curve fitting more often than not. I would try to use some exit which is diametrically opposite of the entry. So if I have entered the trade because of a specific reason, so if there has been a specific trigger that produced the trade, I would exit it when something opposite or something close to opposite is happening. opposite to what? Opposite to what has happened at the entrance. So, for example, that's, it's kind of logical. For example, if I'm doing a mean reverting trade where I enter when the price crosses from above the lower Bollinger Band, I would exit it when it crosses below the upper Bollinger Band instead of, waiting for a take profit or a target to be reached. Also, I would use time stops. So, for example, if I'm considering a trade, if after I enter, the trade does not produce the result in a certain time span, I would just exit it. So, for example, after 10 or n days from entrance, I would close the trade, whatever it is doing, no matter if it's winning or losing. So it all depends on the algo anyway.
And do you use hard stops if a trade goes against you?
Yeah, I do use stop, but usually my stops are not tight. I have noticed that when stops are too tight, you most of the times you end up missing opportunities, especially for counter trend, reversal, mean reverting, or even pullback kind of trades. When you do not give the trade enough oxygen, enough, to breathe and to move before, and maybe to go bad, to go counter trade, to go bad, against your trade before it finally reverses, then I have noticed that you end up missing a lot of opportunities. I would have tight stops on breakouts sometimes, because I'm prepared and I'm willing there to lose a lot of times and to have lots of losers, but few small losers and few big winners. So it depends on the type of approach.
And do you think sort of one of the factors or major factors of your success is the fact that you are diversified across a number of different kind of strategies, pairs, etc., and using small sizes, so everything sort of compensates for everything else? Is that one of the things that really makes this thing work?
I think there is 2 or 3 ingredients. Well, I would say key ingredients. One of them is the one you have just mentioned. So the fact that I try to be as diversified as possible. I even included some exotic currencies like South African or Mexican peso or Norwegian crown, or which have terrible spreads, but they give me a lot of diversification. Otherwise, it's just being in favor or against the dollar, and it really you feel like you are diversified, trading British pound, Swiss franc, and euro against the US dollar. But in reality, you are not. So by including exotic currencies and silver and gold, which are kind of correlated between each other, I try to diversify as much as possible. Also, I try to include commodity currencies such as Norwegian crown, which is very much correlated with crude oil, New Zealand, which is correlated with an Australian dollar and Canadian dollar, which are correlated with crude oil and with commodities as well. And so that's one ingredient. Another one could be the fact that I'm looking at very unusual kind of inefficiencies and edges Another ingredient would be that I'm using very advanced statistical concepts, which not many people are using in the retail industry. And other than that, I would say that I'm trying to stick on my algos, and I try not to deviate from them. So my trading plan, I try to respect it as much as possible, and I'm kind of cold-minded, so I'm not very emotional, and that's also another reason that helps. I mean, that's another reason why I'm not deviating from my trading plan when things go bad, and I try not to have, I try not to allow bad trades to affect my future ones.
Okay, and so I just want to touch on a couple of things here. So the advanced statistical stuff that you're using, obviously you're probably not going to want to share that with us, but is there something you can share that will give our listeners a bit of an insight into where you're using this advanced stats? Is it in the actual charts work, or is it in the risk management or something to that effect?
Well, yeah, I will get, I have never talked about that since I'm very jealous about it. But for you, and this is my first interview in English, so I'm quite honored, and I will make an exception. So let's make an example. And a strategy which is has been doing very well for so many years is some intermarket ones. I have a lot of intermarket strategies. For example, I could trade the cable based on what the U.S. indices have just done in the recent past, taking into account that historically they have had a lot of predictive value in anticipating what the British pound would have done in the short-term future. So I basically look at correlated markets like British pound with, in S&P 500, or Norwegian crown with crude oil, or Canadian dollar with crude oil, or even Australian dollar with gold or crude oil, and I see if there is some predictive value, some predictive potential given from those correlated markets. So I do not only rely on price, which everybody's looking at, but I do look at other curves, at other historical data, at other prices, or not necessarily even just indices, or even just Bloomberg or Reuters indices, or even just ETF or stocks sometimes. So whenever these correlated markets are diverging from their usual correlated behavior, I enter a trade on one or both of them, aiming at their spread to converge back to where it was earlier on, or to where it usually is. In other words, I place sort of reversal trade on the spread between correlated markets. When it diverges, the spread diverges beyond a certain level from its moving average. That works a lot of times. There is so many correlations. A lot of people look at just correlations between currencies. Well, there is some interesting edges there, but not so many, and everybody's looking at them. So it's better to look at correlation between commodities and currencies, or between indices and currencies, or between stocks sometimes and currencies. For example, I'm thinking like lumber. Lumber has such a predictive, which is very small commodity in the United States, traded in the commodities futures exchange in the United States, has a lot of predictive value on British pound as well as on U.S. indices.
Wow. Awesome. Thank you for sharing that. That's really insightful.
That's only for you.
Yeah, brilliant. Thank you. I really appreciate it. Now, when you say spread, you're talking about like the difference between, one price and the other, not necessarily the actual spread of placing a trade. It's the difference between those two is
the
spread
different
apart.
Or the ratio.
Yeah, and it's going to come together.
Or the ratio.
Yeah. Okay, gotcha. Awesome stuff.
Yeah.
That's fantastic. Now, and it's actually really insightful in terms of the fact that you came up with that particular approach. I mean, and I suppose when you say, I'm looking at this, you're obviously getting the algorithm to look at it and then work out when it's got to a point. Is that correct?
Yes, correct. Yeah. That's how it goes.
Okay, so you also talked about the other factor being these, like, you found some rare edges in the market. How did you find them? I'm guessing at that point you had to go on a chart and look. I mean, how do you find these rare edges?
Yeah, well, there is not a method. There is not a predefined approach I use. It's actually the creative part of my trading. It comes from looking at the chart. It comes from listening to a webinar. It comes from reading a book. I got plenty of trading ideas from reading Larry Williams books, plenty of them. And it comes from just reading an article or a blog, or just even thinking about something different. Even sometimes I just say to myself, I have to look at something different, at something nobody's thinking about right now. So then I come up with some ideas, even simple price patterns, and test them. And if they work, fine, then I pursue and continue my research. In case they do not work, then I just, pass over. I just forget about them and think about my next one, my next idea.
Now, this is a bit of a weird question, but given the fact you've read a couple of Larry's books, you're obviously doing the World Cup challenge that he took and won. I've interviewed him, completely screwed that up, but if there was one thing you would ask him, what would it be? If there was a question if you had a question to ask Larry, if I ever get him on the show again, which is probably highly unlikely, what question would you ask him?
Actually, I had the pleasure and honor to exchange several emails with him.
Oh, really?
And I even got some feedback from him on some trading ideas, on reverting strategies. He's following the championships, as far as I know. Last time I got feedback from him, he actually was in Montana fishing with his nephew, and he actually said that he's following it, and he's surprised that a forex trader is heading the competition right now.
Oh, really?
Since that has never happened in the past. And so he congratulated me, and it was a very big pleasure for me, and honor. So Larry Williams is a real legend, not only because of the innovations and ideas and books and indicators, but also for the longevity of his career. I mean, it's amazing. He's still trading, even if he doesn't need to.
Yeah, that's awesome. That's. I'm so glad I asked that question. Now, so why did you decide to go into the World Cup and take it? And why? And why now?
Well, there isn't. I have some. It's quite popular in Italy. I guess not only in Italy but everywhere in the world. But it became popular in Italy more recently, since it was won by an Italian quite popular trader whose name is Andrea Unger. I'm not sure if you have never heard of him.
I've heard of him. He's been on the show indirectly. there's an episode in 52 Traders where he answered all the questions. He actually didn't come on, so I never met him, but he did give me all the questions, and I think my daughter read the questions and I read the answers. So, okay, so there's Andrea, yep.
Yeah, he's very popular here. And, I knew I was doing well and I had the potential. So I'm a competitive guy, and I'm a cold-minded person, so I am not very emotional. So I know that competition is not going to change too much my approach, and it's not going to make me screw up just because of the emotional component. So I wanted to try, and I knew I had potential. I knew my algos were testing well, and I was making money on the market. So I wanted to really see if and even potentially get some visibility, that too, from the financial industry.
Okay, cool.
But first of all, I'm doing it. The main reason I'm doing it for myself, just to get it's nice for my ego. when I see my name there, it's nice. So I even just for that there is no I mean, I'm trading with real money, but it's my money. So it's not like they give you money to trade. No, it's my money. So even if I lose all of it, well, I'm not going to, because I'm very careful about risk management. But even if I do not win, I'm okay. I mean, I have seen my name first ranked for so many days, actually 90% of the time for the first 6 months. So even if now I screw up, I will still be happy, and my ego will have been fed for many days.
Awesome. Now, one thing I've sort of seen is quite common, and I'm not too sure if you know the answer to this, but it seems like a lot of algo traders do this competition. So there's yourself, Scott Welsh, Andre Aranga. I know I've seen Kevin Davey, Tim Ray, other guys. These other guys have been on the show.
From New Zealand.
Yeah, he's from New Zealand. So these guys are all algo traders. They've all done the World Cup championship. Do you think that most of the people here doing it are algo traders, or do you know of anyone that's not?
Yeah, I know of some people who are not algo traders. Some of them are news traders. Some others macro fundamental kind of traders. Some others just discretionary technical analysis. But I have to say that maybe at least 50% are algo traders. Yeah.
Yeah, it's interesting. And I mean, do you have any advice for anyone that was going to take on this championship?
Oh, you mean that regarding the championship, or about trading in general?
Well, if they were saying, well, I think I'm going to have a go at the World Cup. Have you got any advice around anyone specifically on going for it?
Yeah. Well, the first and foremost piece of advice I would give them is remember that it lasts 12 months. So do not trade do not take too much risk. You will not even reach the 6th month. It's very competitive. Its emotional component could come into place. I would advise them to not aim at winning it. Aim at surviving it. 90% of participants, even though most of them are experienced traders, some of them are popular hedge fund managers or traders or educators. A lot of them just do not make it until the end. So I would advise them to be, to not risk too much, to aim at reaching until the end, and then sometimes there is so few players who are left in the last couple of months that you can win it even with just 100% or 80%. A lot of people risk too much, or they try to be the next Larry Williams. No, there is only one Larry Williams. There will never be another one. He has done what nobody else has done. So, and do not try to imitate him, because you will end up burning the account beforehand.
Cool. Awesome. Great advice there. Absolutely superb. Now, obviously, trading with algos is not much in the way of sitting at a chart, or there's nothing in the way of sitting at a chart really, and looking at reading the market and trying to control your emotions there. But I suspect there is some sort of mindset kind of thing at play when you're developing them and coming up with seeing back tests and working out, is this the one that I'm going to take forward? How do you get, or how do you sort of cope with mindset kind of issues, or are you built differently?
Well, as I said before, I'm personally a rather cold-minded person, not very emotional. However, I would say that financial markets will ultimately always end up doing what they have to. And a good mindset principle for me would certainly be to try as much as possible to accept losses as soon as they come. Do not wait for them to affect your next 3, 4, 5 trades. So just let them affect the trade that you have just lost and forget about that for the next ones. I'm aware, though, that in real life, such a piece of advice is quite hard to implement and to put into practice. But the main mindset advice I would give is to try to get rid of the past when it's bad as soon as possible, since you will have more trades in the following days, and if your mindset is affected, you risk to your trade is likely to be affected as well, and you will allow the loss to have an impact on future trades as well.
And so I'm just going to divert here slightly. I mean, if there was somebody trying to get into this business, what steps would you recommend they take to have the cleanest path in and avoid a lot of the trials and tribulations that you had to go through?
Yeah. Well, since we mentioned Larry Williams, I would certainly recommend all of his books, but in particular one of them, which is called Long-Term Secrets for Short-Term Trading. It's full of, it contains plenty of interesting approaches set up, and it's good even for beginners or almost beginners. So I would advise that. Or
and what sort of things has it got in that book?
Sorry?
What sort of things are in the book that are quite useful?
There is a lot of, like the concept of volatility breakout, open range breakout, seasonals, bias, like some markets behave differently on different days of the week or the month, or a lot of different concepts in terms of what really matters in trading.
Cool. Right, we're going to wrap up the show here, guys, with a bit of a quick-fire round. We'll ask you some of the questions here. How long did it take you to go from newbie to consistently profitable?
Well, a long time, as I said before, very quickly, to sum it up, it took me more than 5 years to start developing well-crafted and balanced algos that could stand a chance to be profitable on the market.
Do you have a favorite strategy, and have you given it a name, and what's the name?
Well, yeah, intermarket analysis. I would advise people to get deeper into that intermarket. For sure, that's has a lot of potential, and I would advise anybody to study intermarket. Go look at intermarket, search for that on Google, intermarket trading, and like trading, for example, cable based on the U.S. indices. So if you have a spike in the U.S. index, S&P 500, then if it's a big spike in the next days, you have a good chance to see the British pound spike too. You could go long, for example, and have a good chance to get a winning trade.
Awesome. What's your preferred broker and trading platform?
Well, I use a couple of brokers. People can see them in the verified track records of my World Championship account, which is available on my page on my FX book, where they can find me by searching for Cristian FR. That's Christian, like my first name, followed by F and R. Other than that, I would personally not make any specific recommendation in terms of broker, but in terms of platform, I as I said, I use MetaStock, MetaTrader 4, and CTrader.
Cool. And are you placing trades on all those platforms as well?
Yeah. In the championship, it's all MetaTrader.
Okay. Cool.
MetaTrader 4.
Hey folks, ever wonder what broker I use? Well, I use Hanko Trade. It was a no-brainer because I was looking for a broker with good trading conditions and one that wouldn't restrict my leverage. Now, by joining Hanko Trade, I've also cut down my trading costs significantly with their super low commission of just $1 per 100K. You can learn more at hankotrade.com or just click the link I've put in the description. Brilliant. Look, and could you leave our listeners with one piece of advice?
Well, my advice would be to always remember that most traders do lose money on the market. That has always been the case, and I would swear that will continue to be the case. So it's always better to have low expectations in order to have better chances to exceed them.
Cool. Awesome advice. Now, before we wrap up, what's the best way for the guys to get hold of you?
Well, as I said before, they can find me on my FX book. I'm not sure, is that popular in New Zealand, my FX book?
Yep. People will know that.
You have that.
People will definitely know that, yeah.
Yeah. My FX book, and they could search for Cristian FR, so Christian like my first name, F R, but I think you will post it in the description of the video.
Yep.
From there, they will be able to monitor the track record of all the trades that I take on my World Championship account. So that's updated on a daily basis at least. So they will see what kind of trading I do. Alternatively, they could just find me on Facebook by clicking on the link they should find in the description of this video, or by just looking for searching for Cristian Franchi, make sure you do not screw up with the spelling.
Yeah, what I'll do is I'll put a link. I'll probably put the widget on the page and a link to that MyFix book account, guys. So if you do want to find that, there'll be a link under the video or the podcast, whatever you're watching here or listening to, and you can go and find it very easily. I'll make sure they can get access to that. So look, a big thank you to Cristian for sharing with us today. Everything we discussed here, along with all those links, are in the show notes. To find them, simply search for Cristian, and that's CRISTIAN in the search box on tradingnut.com. Until next time, I wish all my listeners trading happiness and success. All right, guys, so there we have an interview done and dusted with Cristian there. Now, although he didn't do a video for us, we have got that Philip Bloom video up on the YouTube channel this week, so you got to check this out. This is a very, very good video to simplify down trading pretty much anything, and how he gets in and out at amazingly tight stops. but he's not taking mega risks to reward trades now, so he's being more conservative in that space. So guys, that's well worth checking out. Please go and check it out on the YouTube channel. Also check out my Robot Lab build, the latest build that I've done using the Heikin-Ashi candlesticks and the pattern that I noticed happening in these candlestick patterns or across the Heikin-Ashi chart more like time and time again. So I automated it, built something that we've got now testing up and running in the Robot Lab, so you can actually check out the results of how it's performing over there on tradingnut.com. Click on robots, head over to the Robot Builders Club, and on that page you'll see the full-on FX Blue test report that you can go in and analyze and have a look at how things are going there. So that's all over there on Trading Nut. Now, if you do want to automate any of your trading, then yeah, my Robot Builders Club is still open at the moment. So if you do want to come on board for that, learn how to automate some or all of your trading strategy or any strategy or idea you can just come up with, then it's a fantastic place to do that without learning any coding. So it eliminates a whole bunch of that stuff that a lot of you guys out there would struggle with if you jumped into the code. Also, we've got Genius Trader coming as well, so stay tuned for that. Hopefully comes before Christmas. But yeah, guys, thanks for listening, and I'll see you in the next video.